This past week, we saw another dip in the PSEi, driven by peso weakness, mixed earnings, and a more hawkish Fed. But with inflation and GDP data due out and more companies delivering their 2Q earnings results, could we finally see the market break above its trading range? Another week, another opportunity. Welcome to Intelligent Investing. I'm April Tan, Chief Equity Strategist of COL Financial. Let's go over the key moves and what you should watch out for. The PSEi fell 1.7% to 6,306 after briefly climbing past 6,400 the week before. Although it's still stuck in the 6,200 to 6,500 box, consolidating since May. Market breadth was weak with 131 decliners beating just 84 gainers. Foreign investors sold 468.4 million pesos, reversing the prior week's buying. The main driver, peso depreciation. The peso weakened by 1.8% to close at 58.16 per dollar, its lowest since February. This happened because the dollar surged after the Fed kept rates steady, as Fed Chair Jerome Powell warned about potential inflation from tariffs, pushing back hopes for a September rate cut. With the BSP eyeing a rate cut in August, the narrowing gap between peso and dollar yields could make Philippine assets less attractive, adding pressure on the currency and the market. Let's talk 2Q earnings. So far, only 3 of 9 companies that have disclosed their 2Q earnings have beaten expectations, namely MERALCO, PNB, and East West. Big banks disappoint as BDO and BPI both miss forecasts. This was largely responsible for the 6% and 1.9% drop in shares of BDO and BPI. Although they both saw double-digit loan growth, rising provisions hit earnings growth. On the other hand, smaller banks outperformed the big banks, as China Bank stock went up 1.5% as profits were up by 18.1%. East West Bank stock rallied 5.6% as earnings went up 29.5%, although PNB stock fell 4.5% despite its profits rising 29%. Retail investors take note. Smaller banks may take over big banks as market outperformers, especially given their much cheaper valuations. Here are the bank's earnings growth and how they performed versus our estimates. Now on to the power industry. MERALCO's core profits rose 10% year-on-year, beating both COL and consensus forecasts. The strong performance, it benefited from a lot of things like the strong performance of power generation. Maybe 2 years ago, it started to benefit from a power shortage in Singapore. So that helped the generation business do well. And of course, we know now about the excitement on AI. It's in a way a beneficiary because it's a power company. And we know AI companies, data centers, they consume a lot of power. So that's partly the reason, so it's a defensive growth type of company, which makes it a lot sexier in a way. Okay, the update that I can share about it. Pangilinan was interviewed about it, if they would be interested in buying the SMC shares. And he didn't say that he wasn't. In a way, that kind of helps because it means like, of course, I think what investors are worried about is that San Miguel will sell the shares in the open market at any price because, of course, he's making money. His acquisition cost is 90 pesos. So if you have somebody like Metro Pacific Group buying the shares, then of course it's more favorable because you won't see that volatility in the share price. Our next company is RRHI, reporting a 2.4% dip in 2Q core income, mostly due to higher financing costs from its 15.7 billion peso share buyback. But operating performance was solid with net sales up 5.9% in 2Q, better than the first quarter's 4.2%. And although financing costs increased due to the share buyback, EPS will increase because of the smaller number of shares. With consumer spending expected to stay solid and the stock trading at a very cheap valuation, we have a buy rating on RRHI. In other news, MEG raised 1.17 billion pesos from a block sale of MREIT shares. Because of this, MREIT's free float rose to 37.8%. This paves the way for an asset injection of up to 6.8 billion pesos, which could potentially boost the REIT's asset base and market cap by 13%. Something to look forward to for MREIT shareholders as higher dividends are on the horizon. The much-awaited GCash going public will have to wait. as GCash CEO Martha Sazon said the company will delay its IPO, citing readiness and ongoing regulatory uncertainty on e-gaming. That's not surprising as GCash remains profitable and is in no rush to raise cash. But this reflects how e-gaming policy risks remain a big overhang for digital players. GCash is exciting in the sense that if you think about the Philippine market, we don't really have a legitimate internet play or, in a way, naiwanan tayo, di ba, nung pandemic. Like the US had so many tech plays. But in the Philippines, it's the same. You have the banks, you have property companies, you have consumer companies, so naiwanan tayo. And then here we have GCash coming along, finally becoming profitable, and, based on the last funding round, it's $5 billion. Finally, you have this big company, tech company, like your unicorn, your first unicorn in the Philippines, being listed in the PSE. But the problem is, well, you have these funds who bought it at $5 billion. So, of course, they want to exit at a premium. They want to make money. So, I think they're targeting $8 billion. But the question is, how can you justify $8 billion if the e-gaming business will be affected? When you talk to Plus says, around 80% of our cash in are done through e-wallets. Of course, between GCash and Maya, most likely it's GCash, right? At this point, there are concerns given that we don't know yet what will happen to the regulation, etc. That they might not be able to get the price that they want if they list. This coming week could be pivotal. Watch out for these catalysts. Personally, what I'm really watching out for is consumer spending because we've always been talking about how resilient consumer spending is. It's more relevant today that we have all these concerns about Trump tariffs and how it's affecting exports and business spending, business confidence. Potentially, like, if you talk to the common man out in the street, they're not going to tell you, like, I'm not going to spend because I'm, like, worried about the Trump tariffs. At least the Filipinos. Inflation, the drop in inflation and the drop in oil prices will mean that normal Filipinos are more optimistic and that they're spending more. I mean, one positive thing that we can say despite the Trump tariffs is, if you look at the property sector, and you look at the office segment, we're still seeing a lot of the BPOs come in. So that's good news, at least on that end. Next, we have the PSEi rebalancing. Index changes could finally be announced this week. Bloom is widely expected to be removed. However, the question that every investor is waiting to be answered is, will Plus or RCR be added? So we have a viewer question here that asks, what do you think about Marcos not mentioning e-gaming during the SONA? Well, it was considered to be a good news. Diba? I mean, if you think about Pogos, diba? He explicitly said, we're going to ban Pogos. But the fact that President Marcos did not mention e-gaming in the SONA means that he's not going to do an outright ban, or he's not in favor of doing an outright ban, which of course is good for Digi Plus. A lot of people have been highlighting that if ever the president bans e-gaming, it will go underground. And secondly, the government is also generating revenues from e-gaming. So if he bans it, then they will lose all these revenues. So I think maybe it's more of regulations that will happen. Stricter regulations, but not an outright ban. Lastly, don't ignore U.S. market signals. Weak U.S. jobs data raised recession concerns, with only 73,000 jobs added instead of the 110,000 consensus forecast, and with the May and June numbers revised down by almost 90% by the Bureau of Labor Statistics. Following the said revisions, the 3-month average monthly payroll dropped to only 35,000 jobs, which is less than a third of its average during the same period last year. This raises concerns about the U.S. economy and could weigh on risk assets globally, including the PSE. So to recap, the peso drop and Fed pause hurt market momentum. Smaller banks are shining while big banks disappoint. MERALCO and RRHI delivered resilient results. And we now have big updates from MREIT and GCash. That's it for this week's episode of Intelligent Investing. With inflation, GDP, and more 2Q earnings results just ahead, we could finally get a breakout or breakdown from this trading range. To get more insights, check out the latest weekly notes report available in your COL account. If you found this helpful, Don't forget to like, subscribe, and hit the bell icon to know what's moving the market. Another week is another opportunity. I'm April Tan, and this is Intelligent Investing. See you again next week.